Hi friends, tons of requests coming in asking about my opinion on Lemonade and after the earnings. I was about to do an easy video update until a viewer pointed me to ARK Invest take on Lemonade. So thanks Warren for the heads up. I look up to ARK Invest a lot. Respect their vision, respect their goals, and most of all, I'm really impressed with their performance. They had this to say about Lemonade. It is about a 1-minute clip.
Lemonade, are they or will they be able to disrupt the more traditional insurance industry?
Thanks, Tom. I can take this one. Short answer, no, not as we currently see it. Our early read on Lemonade is it has a very low moat in comparison to other insurtechs that leverage more unique technology stacks. The other concern that we have over Lemonade is its dependency and use of reinsurance to stabilize its margins. That has a lot of, there's a high risk in doing that, but also great reward. And we're not too sure as to whether or not we're, just willing to look at that any further. But the reason that I say no to Lemonade disrupting the insurance business is that what they've really done is take a friendly UI and friendly UX and put it into a legacy insurance or essentially wrap it around a legacy insurance business.
I'll link the entire webcast below. Basically what said is they have a low moat, the reinsurance is high risk, and basically Lemonade is a friendly UI wrap around legacy insurance business. Let me recap on what I said regarding Lemonade. I'll link the video up here and down below. Lemonade is disruptive company is shown proof of concept, ability to scale with plenty of raving fans. All these are done. I showed you that I invested 1.8% of my portfolio and said I'll add a little bit more if it drops because it's an IPO stock. It can go up 10 times, it can drop 10 times. I repeated this. Right now I'm at 2.5%. I intend to add further till 3%. Nothing more. Remember the days that I bought Tesla and it dropped like 50% and that was like 50% of my portfolio. So this is nothing. This is just part of the game of the stock market. If you cannot understand that stock prices will swing for no reasons, you should be just buying the index and just off your computer and don't look at your account for a long time. I said this multiple times. So let's address now the earnings of Q2, the good, the bad, and ARK Invest views on Lemonade. Appreciate an early like, it helps a lot out in the channel. Thank you. So let's talk about the good now. In fact, for Q2, Lemonade did pretty well. You see their customers increasing. You look at their revenue. The revenue went up. This is some of Lemonade's performance highlights. Customer increasing, customers are paying more, and in total earning more money. They have made more profits, significantly more in Q2 2020. The loss ratio has been consistently coming down, which is fantastic. It's a good sign that AI is getting smarter. What is loss ratio? Loss ratio is used in the insurance industry representing the ratio of losses to premiums earned. Meaning to say the amount of money Lemonade collects as insurance and the money they pay out, the lower the loss ratio, the better because less loss. For the operating expenses, I want to point out something. You realize that they are spending less on sales and marketing during Q2 2020. So Lemonade was trying to cut back on sales and marketing because they realized they're going to be a very, very bad quarter because of this whole pandemic and they wanted to save some money. But who knows? After cutting back sales and marketing, revenue still went up in the shittiest of market conditions ever. This is crazy. So let's talk about the bad now. Let's talk about the issues ARK brought up. Look, it's ARK Invest. They are awesome, but I have to agree to disagree with them on this. They mentioned Lemonade has like low moat. The reinsurance portion is high risk, high reward, and Lemonade is a friendly UI wrap around legacy insurance business. Look, I bought into Lemonade knowing all these except for the friendly UI part. I'll talk about that later. Yes, I know what and where they are lacking. That's why it only makes up 2.5% of my portfolio. The percentage in my portfolio reflects the confidence in the company. Thus, Tesla making like over 80% of my portfolio. It is really hard to find a perfect company with good risk-reward ratios. Let's address the first issue, reinsurance. Reinsurance occurs when multiple insurance companies share risk by purchasing insurance policies from another insurer. It is a very common practice. So why is this a double-edged sword? it's like paying a little bit money to increase your exposure, which brings high risk and high reward. People hate high risk. Hey, but look, Lemonade, let me remind you, is a new company, and by that definition, it is high risk. Most new businesses fail. The odds to even make it to IPO is like 1,000,000 to 1, and you know that. And if a new company takes a safe route, it is going to fail or it's going to grow like super slow. This is business 101. Read business books, don't read investing books. Next issue is low moat, which I agree. Low moat means easy for competition to come in. Look, I know that, but hey, they are doing something different, and the only insurance company with raving fans. Tesla didn't start with a moat, Square didn't, and so many others didn't. Being a new company, I'm surprised that ARK even talk about moat. Like, new companies almost never have moat. How many times must the world learn not to bet against a company with raving fans for their like products and services? Lemonade is doing something different from the rest of the industry. Increasing revenue in one of the world's worst economic situations, I'm really impressed by their Q2. My investment thesis has not changed. Now, regarding the friendly UI, this is an outright disagreement. While I agree the 2 points above, the UI, while giving you a code, is taking massive amount of data. The same happens when this UI is dispersing the loan. While the claims are being processed, 30% of the claims are approved by the AI, and there are like thousands of data points the AI is learning from, like to detect fraud from your like facial expression, your typing speed, your voice, the time of claim, etc. There are thousands of data points. Also, the biggest reason why is that not another friendly UI wrapped around legacy is the loss ratio is improving year over year and the AI gets smarter. So why did the price drop? It's magic. Good earnings doesn't mean stock price goes up, and bad earnings doesn't mean stock price drop. Look at Disney. Reported like crap earnings to see stock price jump. So it's purely magic. Again, you need to understand that stock market price movement has a mind of its own. The best we can do as an investor is to invest for the long term and let fundamentals like catch up. Concluding, I'm still a big fan of ARK Invest, but being a fan doesn't mean I need to agree with everything. Lemonade makes up only of 2.5% of my portfolio now, and this position is going to be a long position. It's just IPO. Just to remind you, while the risk remains high, the rewards will be crazy if I get this right. Investing, there is never like 100% win. There is no such thing. What's more important is more wins than losses. That's all. What I can do best is to help you do all the research and like share, and keep your thoughts in check when shit happens, and show you exactly what I do before I do it. I'm really not sure what else to do. I'm not like those kind of cockster that show you profits after I do it. Damn lame. Any cock can do it. What you can do best for yourself is digest the information and form your own opinion. Like gather experience along the way while you invest this long journey. This way you'll be a better investor, and if you become a better investor than me, my job is done. Thanks for the early like, it means a lot, and as always, invest safe.